Welcome back to the deep dive. Today, we're tackling a big one, the Phuket real estate market. It's hot, competitive,
Very competitive.
and we're on a mission, really, to find those spots that maybe the average tourist or even investor overlooks.
Yeah, the hidden opportunities.
Exactly. Because if you're a savvy investor, you know that buying in, say, Batam, well, you're probably already paying a premium for growth that's already happened, right?
Yes, it's often the case. You're paying for the established name.
So our goal today is to give you, our listener, a kind of shortcut. We're distilling insights from some serious local experts to see where the real potential for wealth creation might be hiding. Areas poised for, future growth.
And it's important to ground this.
Yeah.
These insights, they're primarily drawn from the experience of Ocean Worldwide.
Right.
They're a luxury real estate agency actually based in Phuket.
Okay.
Been there since 2004. The director, Sandra O'Neill, and her team, they've helped literally thousands of families and investors navigate this market.
Wow, since 2004.
Yeah.
That's deep local knowledge.
It really is.
Yeah.
So we're getting a very experienced on-the-ground perspective here, not just looking at headlines.
Makes sense.
So for you listening, we've kind of broken this down. We'll look at specific hidden gem locations, why they're interesting now. We'll talk strategy, timing things right, and importantly, hitting that crucial financial buffer, the 20 to 30% rule,
Okay.
and then how professional management can really boost returns, plus a look at what's driving demand long-term.
Perfect. Let's dive into segment 1 then, mapping these undiscovered spots.
Right.
So we're shifting away from the really established areas. The source material seems to suggest a trade-off. Maybe less immediate convenience, but potentially much bigger upside later. Where should people be looking?
Yeah, the sources really point away from the most famous beaches, the ones you see everywhere online. The #1 emerging gem they highlight right now, it's Phuket.
Hua. Okay, tell me about Hua.
They call it a tranquil investment sanctuary.
Yeah.
Think peaceful, slower pace, lots of green. The key for investors is the entry point. It's lower now. You're essentially buying before the area fully matures.
So you're betting on future development.
Exactly. The infrastructure, like roads and services, it's developing. Getting in now means you're positioned to benefit when Phuket becomes, more established. It's a bet on that future connectivity and convenience.
Okay, I get the tranquility appeal, but let me push back a bit here. If your target renter is maybe an expat family needing schools or someone needing easy commutes, wouldn't a hidden gem like Hua, maybe adding 45 minutes to get somewhere important, be a disadvantage? Does the lower price really offset that current lack of infrastructure for that kind of renter?
That's a really crucial point, and it highlights this idea of micro markets within Phuket. Hua is probably ideal for investors targeting a specific niche, maybe the high-end holiday home market, people who want to be away from the bustle.
Right, escape seekers.
Exactly. But if your goal is stable, year-round income from, say, families or professionals, then you look somewhere else. The sources point strongly towards Koh Kau for that.
Koh Kau. Interesting. That's more inland, isn't it?
It is. It's not a prime beach spot.
Right.
But its strength is strategic location. It's close to the big international schools, close to the main roads for commuting.
Oh, okay.
So you get consistent year-round demand from expats, professionals on yearly contracts. That means a much steadier rental income stream compared to the ups and downs of seasonal holiday lets.
Got it. So Coco offers utility, stability. Hua is more about betting on future luxury and appreciation. What about the coastline, though? Are there any coastal areas left that still offer that early stage value?
Oh, absolutely. The sources definitely flag the north of the island, specifically Nai and Nai Thon. They're described as untouched northern gems.
Untouched. In Phuket.
Relatively speaking, yes.
Okay.
They're much less developed than areas further south. It's seen as kind of the next frontier for Phuket development. New luxury projects are being planned up there.
So getting in now could mean securing prices before a potential boom kicks off with major construction?
That's the idea, pre-boom pricing.
Okay. And then there's Layan. It's right next door to the super busy Bang Tao area, isn't it?
It is, and it seems to be benefiting from that proximity. It offers, as the source puts it, a more refined and less crowded experience than Bang Tao. So you get a similar lifestyle, access to the same sorts of amenities, but potentially with a better value proposition if you invest early. You're close to the action, but not right in the thick of it.
Right. Okay. That makes sense. We've mapped out some key locations. Now let's shift gears in segment 2 to the how. How do you invest smartly? The sources stress Phuket isn't one single market, But these micro markets, let's unpack that.
Yeah, a micro market isn't just about the physical location. It's about the demand profile driving that location.
Okay.
So Layton's market, for example, that's driven by people wanting proximity to high-end beach clubs, fancy restaurants. It's a lifestyle choice.
Right.
Kokayu's market, that's driven by school catchments, easy commutes. It's a utility choice.
Yeah.
Understanding why people want to be in a specific area dictates the kind of property you should buy and even how you might renovate it.
That leads nicely into timing, doesn't it? Understanding property cycles. The source uses a surfing analogy, catching the wave. How do you actually do that in Phuket without just guessing? Are there specific indicators?
It's less about guessing and more about observation, especially watching government actions. Are they acquiring large plots of land for major infrastructure projects, like new hospitals, maybe rail links, new airport facilities?
Okay.
That signals the market might be entering an expansion phase. That's often the sweet spot for buying.
And the flip side, when should you be cautious?
If you suddenly see, say, 5 new condo towers launching all at once in one small area, you might be hitting hypersupply. Too much competition, which can really hurt rental yields and resale values. Patience in watching these broader trends are key.
That definitely makes it feel more like strategic planning than just luck. Okay, let's talk numbers. The sources highlight a specific target, aiming for a potential 20 to 30% profit. Why such a high target? What specific costs, maybe unique to Thailand, make that big buffer necessary?
Right, this isn't just about being greedy. That 20–30% margin is really about sophisticated risk management, particularly in the Thai context.
Okay, risk management. How so?
Well, first, you've got significant transaction costs that chip away at your gross profit. Transfer fees can be up to around 6% potentially. And very importantly for investors not holding super long term, there's the specific business tax.
Specific business stat.
Yeah, it can apply if you sell a property within 5 years of acquiring it. That can be a substantial hit if you weren't planning for it.
I see.
Second, that buffer covers construction risk. If you're buying off-plan, which is common for getting lower prices, well, delays happen. Projects can slip by a year, sometimes more.
Right. And your capital is tied up.
Exactly. Your capital is locked up longer, your holding costs increase.
Yeah.
That 20–30% buffer gives you breathing room for these unexpected issues. It's almost like a mandatory safety net for navigating the market effectively.
So if your projections don't realistically show at least that 20% potential upside, the deal might just be too risky no matter how nice the location looks.
That's a very prudent way to look at it, yes. Which reinforces why getting in early on, promising new developments from builders with a good track record, is such a common strategy. It's often the best way to secure the potential margin you need.
Okay, that clarifies the financial strategy. Now, once you have the property, how do you maximize its value? Let's talk enhancements and management in segment 3.
Right, so you've bought smart, you've got that potential margin baked in. Now it's about realizing it. And for the kind of savvy investor we're talking about, maybe targeting higher-end renters or buyers, it's often about more than just a quick paint job.
What kinds of enhancements really move the needle for today's renters or buyers in Phuket?
Connectivity is huge. Seriously, ensuring you have fast, reliable fiber optic internet is almost non-negotiable now.
Okay, beyond just Wi-Fi.
Absolutely. Then think about upgrading key things to European or maybe Japanese standards appliances fixtures. Smart home features are also increasingly expected at the higher end. Things like security systems you can monitor remotely, smart climate control.
So less cosmetic, more functional, and tech-focused upgrades.
Precisely. These are the things that can genuinely justify a noticeable bump, maybe 10–15%, in the rental price or final sale value, more so than just changing the color scheme.
That makes sense. But before you even touch renovations, the sources mention certain natural features that give you instant value. What are the big ones?
There are 2 standouts, according to the analysis. First, sea views. Guaranteed, unblockable sea views.
Guaranteed and unblockable. Keywords there.
Definitely. Properties with those often command a premium of 20–30% compared to similar properties without the view. It's massive.
Wow. Okay.
And the second is beach proximity, being within easy walking distance to the beach. That commands its own separate premium, typically 15–25%.
So if you're prioritizing properties with one or ideally both of these features is crucial because, well, you can't renovate your way to a sea view.
Exactly. It's inherent value you're buying.
Okay, so you've got the right property, maybe enhanced it smartly. Now managing it, especially from afar. The sources stress professional property management. Why is this so essential?
It's really about moving from passive ownership to active revenue optimization and hassle-free operation. It's not just about finding tenants and cleaning.
Okay, how do they optimize revenue?
The key is dynamic pricing. Good management firms don't just set a rate and forget it. They use data, algorithms.
Algorithms for rentals?
Yeah, sophisticated ones. They track real-time demand signals, flight arrivals, big local events, festivals, even conferences. And they adjust the rental price daily, sometimes even hourly, to match demand.
Okay, that sounds powerful.
It is. During peak times, like the high season holidays, this can push occupancy rates way up, often over 90%, and the yield increase compared to just having a fixed rate, it can be up to 30% higher in some cases.
30% higher yield just from smarter pricing. Wow.
It turns the property into a much more active revenue generator. And beyond just money, they handle the headaches.
Like maintenance.
Proactive maintenance, yes. Scheduling checks, servicing AC units before they break down, preventing small issues from becoming big, expensive repairs. That also leads to better guest reviews, which feeds back into more bookings.
Makes sense.
And then there's all the admin, paying utility bills, dealing with local property taxes, common area fees. If you're overseas, trying to manage that smoothly is, frankly, a nightmare. A good management company handles all of that.
So it's convenience, risk reduction, and potentially higher returns. Seems like a no-brainer for many investors.
For remote investors, it's often considered essential.
All right, let's move into our final segment. Segment 4, property types and the future outlook. Let's compare the main options, starting with the most accessible, condominiums.
Condos are definitely the entry-level play. Typical price range, maybe $2 million up to around $8 million Thai baht. That's roughly, what, $55K to $220K US dollars, give or take exchange rates.
And the appeal.
They generally target the tourist market, short-term renters. They can offer pretty good gross rental yields on paper, often quoted around 5% to 8%.
You emphasize gross there. What's the catch?
The catch is seasonality and vacancy. Those yields can look great in high season, but you might have significant empty periods during the low season. That means higher turnover, more intensive management needed to keep filling it. The net yield after all costs and vacancies can be quite different.
Okay. So contrast that with the premium option, standalone villas.
Villas are a different league. Price-wise, you're usually looking at 10 million baht plus, so over 275K USD, often much more.
And who runs these?
They typically attract the higher-end market, long-term expats, families relocating, luxury holiday renters looking for space and privacy.
And the yields.
Because they often secure longer-term tenants, especially in stable areas like Phuket we mentioned, villas tend to offer the highest net rental yields, potentially 6% to 10% or even more after costs. Plus, they generally have stronger potential for capital appreciation over the long run.
But higher costs too, presumably.
Yeah, definitely. Higher purchase price, higher maintenance costs, groundskeeping, pool care. It's a bigger commitment. But for the right investor, the more stable, high-value rental income can be very appealing.
Okay, looking forward now. What are the big drivers shaping Phuket's property market future?
The number one factor is probably increased flight connectivity. Tourism is bouncing back strongly post-pandemic. World Bank data and local reports show numbers climbing, potentially set to exceed pre-COVID levels.
More tourists means.
More demand for rentals, short-term initially, but it creates a bigger pool of people who might eventually fall in love with the place and look to buy. It fuels the entire market.
Beyond just visitor numbers, what else?
The fundamental lifestyle perks. Phuket's core appeals the beach. The beaches, the food, the weather, the overall quality of life that remains incredibly strong. People aren't just buying bricks and mortar, they're buying into that lifestyle. That provides a solid underlying value.
What about the Thai baht? It's been quite strong recently. How does that impact things?
That's an interesting one. A stronger baht can make it initially more expensive for foreign buyers to get in, that's true.
A headwind, then?
Potentially, for entry. But on the other hand, a strong currency usually signals a more stable, robust economy. For investors already holding property or taking a long-term view, that underlying economic strength is actually positive. It supports property values and reduces the risk of sharp downturns.
Okay, interesting perspective. And finally, future-proofing and investment. What should investors be watching?
Infrastructure is key. Keep an eye on where new roads, tunnels, or maybe expanded airport facilities are planned. Those developments can unlock value in previously overlooked areas, creating the next Hua, so to speak.
Makes sense.
And also the trend towards secure, well-managed, gated communities. These offer convenience, security, shared amenities. They're very appealing to the high-end expat and retiree demographics. Properties within these well-run communities often hold their value better and are easier to rent out consistently.
Okay, so wrapping up. The big takeaway seems to be The real opportunity in Phuket right now isn't necessarily in the most obvious, crowded tourist spots. It's about strategically looking at quieter areas with future potential, like Hoa or the northern coast.
Right. Pre-appreciation areas.
Well, being really disciplined about the financials. That 20–30% target isn't just a goal, it's a necessary buffer against local market risks.
Absolutely critical.
And leveraging professional management isn't just a convenience, it's a tool for genuinely maximizing your returns through things like dynamic pricing.
Couldn't agree more. And the final thought maybe to leave listeners with is keep watching the people. Where are the remote workers clustering? Which areas are attracting expat families needing specific amenities? Understanding those demographic shifts, that's how you spot the next Coco Kai, perhaps an area we haven't even mentioned today, before everyone else does. Anticipating that next wave of demand is where the really smart gains might be found.
Excellent point. So, if you listening are considering investing in Phuket and you want guidance from people who truly know this market inside out, remember, the agency behind these insights, Ocean Worldwide, has been doing this since 2004.
That's right. Deep experience.
We definitely recommend reaching out to them.
You can connect with Sandra O'Neill and her expert team directly. Just visit their website. It's oceanwwp.com. That's oceanwwp.com.